It's not only the Chinese, the British are pulling back, the Canadians are pulling back, people from Mexico also pulling back. So there are many confluence of factors. Slower economic growth in these countries, so as less income is generated, they are less capable of buying here in the U.S. Stronger dollar is also making it more expensive to buy here in the U.S. But specifically related to China, capital control, no doubt, is limiting the money that can be taken out of China to invest here safely in the U.S.
What role, if any, does a sense that foreigners are not welcome in the United States anymore play in this, if at all?
When you look at any economic data, to see a 36% decline on a year-over-year, that is a substantial number, far in excess of any economic factors. So without a doubt, the capital control had play, but the trade war rhetoric, whether people are anticipating less trade and hence less business activity, which means a Chinese business person would not want to buy property in Seattle knowing that maybe their companies cannot expand here in the U.S. So the high temperature trade war rhetoric, I'm sure, is pulling back some of the potential buyers.
And yet the Chinese remain the #1 single largest buyers of U.S. property. They spent $13.4 billion, but that was down by more than half from $30 billion the year before.
One should anticipate that given the GDP growth rate in China of 6%, that there will be continuing increase of Chinese buyers in the U.S. Typically, foreign buyers, they are high net worth individuals, and the GDP growth of that nature will continue to generate people who are wealthy enough to buy in the U.S. But the trade war rhetoric, or even the discussion about the immigration, I think that is holding back. But at the same time, you see the Canadians pulling back. The British are also pulling back because British pound is much weaker compared to the U.S. dollar.
And the median price, in fact, of foreign buyers, as your report states, Lawrence, is slightly higher than the average price. What impact overall does this have on the overall housing market? I mean, I would imagine it's sort of a push-pull. You have this 36% drop in foreign buyers, but you also have inventories which are very limited.
Well, Melissa, what that means is that on the high-end property in, say, New York City, Miami, there could be some oversupply because foreigners are very attractive to these markets. But if the foreigners are not stepping in, that means there could be an excess supply. And also the SALT situation is also hurting in the New York, New Jersey market a bit. But on the flip side of the coin, in some markets where there is a tight inventory shortage, given that now the foreigners are not there, it may provide a better opportunity for domestic buyers to get into the market.